What's up, traders? Do you know that market trends only 30% of the time? The rest 70 to 80% of the time the market consolidate or moves in sideway. So in that case, you need to know how to predict a breakout of consolidation so that you can ride early trend, and also how to trade range bound market. So in this video, I'll discuss 3 criteria that you can apply to predict a breakout of consolidation, and you can trade consolidation market profitably. If this is something interesting to you, then smash the like button for me. And also don't forget to subscribe, because in this channel I release a lot of valuable content, including live analysis and strategies that will change the way you trade. With that said, let's get into it. First, let's learn what is a consolidation or a range bound market. So a consolidation market is when a market ranges between support and resistance. So when you say a market ranging between support and resistance, that is what we call a consolidation market. Now remember, when a market trends, so creating, say for example, series of lower high and lower low, this trend only for a certain period of time. Most of the time market ranges. So after a trend, it is started to range. So this is what we call a consolidation or a range bound market, and this is resistance, this is support. So when you see a market like this, that is what we call a consolidation or a range bound market. And that is what you will learn today, how you can predict the breakout of this consolidation, and even how you can trade when the market is already consolidating. Okay, let's see now what are the types of consolidation market. So the first type that we know that consolidation market is narrow range consolidation market, and the best way to trade this market is not to trade. Always stay away from narrow ranging market. So what is a narrow ranging market? So when you see a market like this, like one candle, almost a candle going side by side, that is what we call a narrow ranging market. Okay, so ranging in a narrow pattern. So when you see a market like this, always stay away from this market. This kind of market will give you nothing but losing trade. The next types of consolidation market that we will be discussing today is wide range consolidation market. So when you see a wide range consolidation market, in that case you only try to trade from support or from resistance. So what is a wide range consolidation market? So when you see a market like this ranging in a wide range with a support, defined support and resistance, in that case we can say this is a wide range consolidation market. Now to trade this market, we will learn now 3 important criteria that you can apply to predict which way finally this range will break down or up, and how you can predict this breakout. Now we'll learn which way a breakout may occur. So when you see a consolidation market, there must be a breakout either to the upside or downside. Now this is the most important question you need to ask yourself when you are trading a consolidation market, that which way the breakout may occur. So there are 3 criteria that we will discuss today, by which we can determine which way this market may break. So remember, this is not 100%. Trading is probability. This is a probability. You always find a market that is doing something completely different, but majority of the case that you will see we will apply these three criteria to find out which way this market may break out. Now first let's learn these three criteria, and then I will show in the chart how you can apply these three criteria to find out which way this market may break out. So first let's learn the criteria. So what is the first criteria is breakout is likely to occur along the direction of major trend. So when you see a market is trending like this, say for example creating a series of lower high and lower low, and after a certain period of time the market is say like this ranging, okay. So the theory is that when you see an established downtrend or an uptrend and then the market is ranging, it is highly likely that this market will break to the direction of the major trend. So if it is a say daily time frame, the trend is down and you see a consolidation on the lower time frame, it is likely that it will break to the downside along the direction of the major trend. So what is the next criteria? The next criteria is breakout is likely to occur on the other side of false breakout. So when a market ranges, so after the, as I told you, after this trend, when the market ranges, so it creates at some point some false breakout. In most cases you will see that false breakout occur. So I will show you in chart how it looks like. Let's first discuss. So when the false breakout occurs, say ranging like this, okay, and then break to the upside, and then came back to the range, so this is a false breakout. So when you see a false breakout, most likely that this instrument finally will break out to the other side of the false breakout. So if the false breakout to the upside, then it is likely that this instrument will finally break to the downside. So this is the second symptom that you can consider to find out which way this consolidation may break out. Now let's discuss the third criteria. Support breakout may occur if the series of lower high. Resistance breakout may occur if series of higher low. So what do I mean by this? Say for example, if you see an instrument like this, okay, ranging like this. Now this is a support, right? Now on this support, what you can see that when it is ranging, every time it is creating series of lower high. So when you see an instrument ranging, creating a series of lower high on top of a support, it is highly likely that this instrument will break to the downside. It's like you are hammering on something constantly. So the price is basically hammering on the support and finally break to the downside, is because the buyers basically getting exhausted. That's why they cannot create a higher high. So that means sellers taking control and finally support is broken. On the other hand, if you see an instrument is creating series of higher low on a resistance like this, say this is a resistance, and creating series of higher low, that means it is highly likely that this instrument will break to the upside. Okay, so first let's see this example here. Okay, so this is a downtrending market, established downtrending market. Look at this, the price was downtrending for a very long term, and then at some point what happened, the price consolidated. Now look at this here. So let's zoom in here, and in this zone the price consolidated, right? So when the price was here, let's grab the replay. Now say the price in this situation, now after this downtrend, what happened, the price is consolidating, right? Now from this zone, how you can determine if the price will start to move up or will finally break to the downside, right? So how do you know? So this is what we will be applying today. The first criteria is it is likely that this instrument will break out to the downside because the major trend, long-term trend, is down. This is our first criteria, right? So when you see this three checklist is tick, then you can say that highly likely that this instrument will break to the direction of the trend, or down or up. So this is the first criteria. So what is the second criteria? Breakout may occur opposite direction of false breakout. Now look at this one. Let's draw the support, and so this is the resistance and this is the support, right? So this is the support and this is the resistance. Now look at this here. What happened? The price created a false breakout of this resistance here. The price came here, ranged from here, created a resistance here, and then moved to the downside, went up, created a false breakout. That means broke the resistance and came back to the range again. So this is a false breakout. And then what happened? The price came to the support and again ranging in between. So false breakout is in this direction. So we might likely to see that this instrument finally will break to the downside. Third criteria is that support breakout is likely to occur if the series of lower high. Resistance breakout is likely to occur if the series of higher low. Now what happened with this one? Look at this. Do we see series of higher high? Let's replay and see what's happening. Okay, so we see that finally this instrument broke to the downside. Now let's see what kind of price action it has created. Now starting from here, so this is a false breakout, right? Except this one, what we are seeing that the price has created basically a series of lower high and then finally broke the support. These are the three criteria that you can apply to find out which way a market may finally break. Now let's see more examples to find out how we can apply this criteria. Okay, so let's see another example. Okay, now this one is, look at this. This is an uptrending market, so established uptrending market. Now when it is trending to the up, what we have seen at certain point the price ranges here. Okay, so this is a range bound in this zone. The price was ranging. So in this range, let's find out the support and resistance. So this is the support and this is the resistance. So this is the zone where the price was ranging. Okay, now in this range, let's apply our first criteria that it is likely to break along the direction of major trend. So the major trend is up, so it is likely to break this instrument after this range to the up. And what we see that this is what happened. So this is the first criteria. What is the second criteria? It is likely to break along the opposite direction of the false breakout. Now look at this here. When the price was ranging here, it has finally created a false breakout to the downside. So this is the support here, and what happened? The price broke this support and then finally again went back to the range. So in that case, what we can say that this instrument has created a false breakout and finally broke the other side of the false breakout. Now let's apply the third criteria. Now this, because it has broken the resistance here, so when there is a resistance breakout, what we likely to see? Series of higher low. So what we have discussed that when you see a series of higher low on a resistance, it is likely that the resistance may break. Now look at this one here. So what do you see? That the resistance is broken. Now on this resistance break, what we are seeing that except this false breakout, the price every time creating series of higher low on a level of resistance. So finally what happened? The price broke this resistance and trend to the upside. These are the three criteria that you can apply to find out which way a consolidation may break. Now before I finish, let's recap. So the first criteria of a consolidation is the price is likely to break of a consolidation in the direction of major trend. So if the trend is down, and consolidation, it is likely that this instrument will break to the downside. The second criteria is when you see a consolidation and the false breakout in one side, it is likely that the instrument will finally break to the other side of consolidation. So if there's the false breakout here and then the price broke and then came back to the range, that is a false breakout, and finally this instrument is likely to break to the downside. Third criteria is when you see an instrument, say for example on a support, creating series of lower high, that is the pressure on the support is finally likely to break this support to the downside. On the other hand, if you see a resistance and the price is creating series of higher low on a resistance, so it is likely that this instrument will finally break this resistance and will start to move up. So these are the criteria that you can keep in mind simply to find out which way a consolidation may break and trade based on this criteria. I sincerely believe that this video was helpful to you. If you like this video, then press the thumbs up and also leave a comment below. Thank you for watching. See you in my next video.